Hey guys, Mike here. So we're gonna go over all your questions and comments, and you guys have some really good questions. So even I learned something trying to put this stuff together for you, which I kind of always do. So we got questions on how do you know if the big money is gonna be diversified or moving away from the Magnificent Seven and maybe moving into other stocks, rate cuts as far as how it affects inflation, and just all kinds of stuff, especially on the yields and stuff. And so we'll start off here talking about. Well, exactly what I just said. I wonder what the signal would be for a beginning to the market diversifying away from the Magnificent Seven. There's many ways you can actually look at this. One is you type in IWM versus QQQ, right? So it's a small caps versus mega tech, really, is what you're looking at here. So this is one to look at because IWM has been the toilet, the Qs have not compared to it. And you can see, I think we're at all-time lows in this thing. So if you start to see this turn up, that means the IWM is outperforming. That means bigger money is heading into smaller caps because the market does like to rotate into things that have just been beaten down, undervalued, that kind of stuff, versus things that are extremely overvalued. So that's one to look at. Again, this is the QQQ. This is why you want to look at that, right? So look at the top 10. The top 10, 8 of them, what is it, Magnificent 7, 8, whatever you want to call them. But this makes up, let's see here, 45%, I believe it is, out of a boatload of stocks. So that's why you want to look at that. QQEW, this is the equal weighted ETF of the QQQ. You can see the QQQ has handily outperformed it by 30% this year. So if you pull this up and you go year to date, you can see right here it's outperformed it by 21%. So if you see this gap closing, right, that means they're moving into other stocks right there. So make sure you pay close attention to that. And you can go through different time frames. What is this, like 1 year ago? And so 14%. So it actually widened, right? But then you go 5 days and you go, oh, it's pretty even. And I think I told you the other day where the QQEW had actually outperformed the QQQ. And if you've ever been curious, the QQEW holds this kind of stuff, right? So it's not exactly weighted equally, but it's all like 1 point something percent. And you can see it's nothing like the QQQ, as I just showed you. So even the top 10 are different. And so if these stocks start getting money moved into it, you're going to see it through that ETF. Another one is FNGU, Fungu, or however you want to pronounce it. It's a 3x leverage ETF that holds the Magnificent Seven and some more stocks here, as you can see. And it's been just, what is it, 482% since 2023 even started. But when you go over here, what's it hold? Well, look at those names. What does it look like to you? That's pretty much the Magnificent 7, 8, 9, 10, whatever you want to call them. You see the weights on them. That's all it holds, right? And so it's 100% of it. So if you see it start heading south, and you start looking over other things and they're heading up, that kind of lets you know what's happening, right? Because big money is what pushes this market around. So hopefully that helps. Let me know if you got any ideas yourself. Next one is, Mike, I'm surprised you didn't mention how much the IRS said Microsoft has to pay them, like $29 billion. He's talking about back taxes here. The reason why I didn't even talk about it, because IRS is really outgunned on this. But here you can see it came out the other day. IRS says Microsoft owes an additional $29 billion in back taxes. And so, the company disagrees, of course, and now they're going to contest this in court. And the IRS does not have a great track record on this because they're so heavily outgunned, right? Look at this right here. Amazon defeats IRS appeal in U.S. tax dispute in 2019. You go over here. Look at this one. Facebook in 2020, the IRS said they owe $9 billion back taxes. And look at the update here. This is 2023. This thing still has not concluded. To this day, I go down here, it says right here in Facebook. Social media company Facebook is waiting for a court decision. So they've already went through the trial. They still do not have a decision yet. And so our courts move really slow, and these big companies have literally entire office buildings of lawyers to face off against the IRS, who has very little resources compared to them, right? And so, are they going to have to pay $26 billion? We'll see, but it's most likely going to be a long time from now before we even hear anything about it. So, we'll see what happens. We'll see what happens. IRS is one of few on there, but that's why I didn't bring it up, and I don't see it as that big a deal, to be honest with you. Now, next we got Jeffrey here, says S&P 500 PE is almost 25 with deteriorating earnings. Does that really make sense? Why on earth are people saying these inflated stock prices? Basically saying why the market would move up and people would continue to move into FANG. Down at the bottom, somebody says Ford PE is 16 or 17 X FANG, and that's actually true. When you go over here at Ford PE right here, Just came out like Wednesday, I believe. So it's updated data. And the S&P X mega cap is 16 for the forward PE. Mega cap alone is 27. S&P 500 with mega cap is like 18 right there. And then we come over here and you just see like this is the performance, right? There's the total down at the bottom. There's S&P 500 X mega cap, and then there is the mega caps. All right, and that's Microsoft, Apple, Tesla, all those. Okay, so yeah, the gentleman at the bottom was pretty much right on about that. Next, Zahn says, Mike, any data on student loan repayments? Wondering if that is starting to weigh heavy on consumers. Actually, it's just starting back this month. It started October 7th, but also as one of you guys pointed out to me months ago, and I appreciate that there's like a 12-month window where like if you miss a payment, it's not even going to count against you. And so some people aren't even going to start in October. And I mean, I think a lot of people will start paying in October, but right here you see if you miss a payment, don't stress, right? The Biden administration has provided a year-long on-ramp to help ease borrowers back. This is just another form of liquidity by keeping money in people's pockets until they're ready to pay this stuff back. And of course, at the same time, I guess kind of helping their credit out by not getting hit as well if they can't afford it. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. Next one from Mr. Whifflehead. Do buybacks start immediately once the company has reported? And we're talking about the earnings blackout window. Well, what I found this is most publicly traded companies have a policy that restricts trading in company shares called the blackout policy, beginning 2 weeks prior to the quarter and end through 48 hours after earnings are released. And so again, each company's different, and so they can start buying when they want to, whatever their blackout window is. But also you got to think about this. They know what earnings are going to be, right? So let's say Netflix is going down right now, and they know they're not going to hit earnings. They're reporting this Wednesday. You definitely wouldn't even want to be buying shares anyway, right? You would want to wait. If you're like, market's probably going to hit us hard on this one, we can pick it up down here versus picking it up here. So, just kind of keep that in mind as well. They know what's happening and stuff. So, yeah, probably, and whatever, again, 48 hours. Some people have 24 hours. There's also ways around this. I've showed this in the past, these plans they have. And so keep that in mind as well. Now, next viewer says, how can we get updates as to what BlackRock purchases and when they do? I use this site right here called Hedge Follow. And you can go there. It has like the largest buys and largest hedge funds, popular hedge funds. Let us know down the bottom if there's one you use. But the problem is, no matter how I go through this, it's still going to be the prior quarter. I mean, this one will show you 13F filings and dates and things like that. But I come back up here and I'm like, okay, let me go with top hedge funds, or actually let's go with popular hedge funds. And I click on, Warren Buffett and go to largest trades. Well, you can see, I mean, all that stuff was last quarter because I did a video on it for you guys, right? And so they won't report this till usually 30 to 45 days after the quarter is over. So, whether it's a paid site, free site, this right here is a free site. So whether it's a paid site or free site, put down in the comments which one you use if you can get even more. I know some people use like FINRA, I believe it is. You can try that one as well, but you can go ahead and just search any hedge fund you want to and stuff. But usually it is going to be old. And it depends on the hedge fund too, because like Warren Buffett, he's not a day trader, right? He's usually not moving in and out of positions like some folks do. Some of them, these hedge funds, they move out fast in and out of these positions. So they're not even holding it come the next quarter and stuff. So you got to keep that in mind as well. Now, Sunshine says, how are they going to stop hiking, talking about the Fed, when inflation is going up? And I like this response from Cameron here. Because we are already too tight for the system to survive, banks can't withstand rates of 4%, let alone where we are. The most important part to the higher for longer narrative is now the longer. One more rate hike won't do anything, as we are already way too tight. If they truly hold for longer, the system will collapse, i.e. they will soon aggressively cut rates in a panic when something actually breaks. And before I talk about that, I'm actually going to go into this one right here where Sunrisen says the slightest drop in interest rates will cause consumer demand to surge. Housing, solar, auto stocks all benefited today. If demand surges, prices surge, inflation follows. The Fed cannot stop holding rates higher for longer. The economy is too strong. The market will have to go to new highs based on earnings, not falling rates. And so, yeah, there is a conundrum here, right? And if you watched my video yesterday, if not, I'll link it to the end. I told you what's happening is, as Paul Tudor Jones said, is that the yields that keep going up, right? It's like this is another rate hike happening, or multiple rate hikes happening, right? Because they have to try to fund this deficit that our government keeps running, which keeps expanding. And so, the Fed is really out of control at this point in time. It's really, they're not even in control. It's the bond market is in control at this point in time, it seems like, and what they're going to do and how these bond auction goes. That's a whole different thing, which I'm learning about, you get to learn about. And so I'm getting to learn a lot more about yields and bonds I've ever thought I would in my lifetime, but it makes sense. And so, yeah, but the other problem is the employment. I mean, people still have jobs, man, whether it's part-time, full-time, 2 part-times, whatever it is. I said 8 months ago, whatever it was. I don't care if it's 3 part-time jobs. It's jobs, right? The fact they can even find 3 part-time jobs is crazy. I mean, 2 years ago, you wouldn't have been able to find 3 part-time jobs, but they're still out there, right? And I showed you where you got people over 65, they're going back to work, right? The banks are reporting that people got crazy amounts of savings and stuff like that. And so, and again, I'm telling you, there's 2 different kind of economies. I know what people are screaming at their phone or TV, however you watch this. There's 2 different economies. People make X amount of dollars and below are getting crushed. People make X amount and above and have assets that can appreciate or loving life, and inflation has been good to them. That's kind of how it works. So, can they cut anytime soon? I mean, they should never cut until we're actually in a real recession, right? They just, unfortunately, it's their making. Like, they're guilty. They held rates too low for too long. That's just the way it is. That's what caused that huge bull run going on for over a decade. All right, and now we're paying the price for it. You got to pay the piper. That's the way it works, and now we get to pay for it. So next, you got right here. I just want to put this in here because it makes me laugh all the time. When I talk about Disney's chart, somebody always said, well, Disney's too woke to even take a chance with, cancel the mouse. I mean, the hatred for Disney is huge, right? They got something, that most stocks don't have to deal with, right, which is the public. Now, the other one is right here, which is a good point from Mark. The last time Peltz, which was that huge investor, I think he upped his investment like $2.7 billion in Disney stock, challenged the Disney stock, it went up 3 weeks straight. Disney's been cutting costs, implementing password sharing, prohibitions, and refocusing, all that good stuff. And you can see on the chart, I mean, it had a good pump up, got rejected right there, ended up selling back down and stuff. Another thing they're doing, they're raising ticket prices, right? And so I don't go to Disney. My brother goes to Disney all the time. Let me know if you go to Disney. I wasn't going to pay their prices before. I sure ain't about to pay them now. And I'll just wait for my son to get older until we finally take that trip. But I'm just not a big Disney fan in general. We do watch the streaming channel, though, because I like Star Wars and stuff like that. But again, this is just, it's got a lot of hate from the public. It has to deal with because of stuff they did with the movies and stuff. Next right here, we got Eric. Appreciate you sharing this. We were talking about small businesses, things of that nature. And he says, we own a trucking company and the rates have plummeted over the last month. They were already taking a hit, but it accelerated here recently. Thankfully, one of our customers is considered infrastructure critical and the rates are good. If not, we solely had to rely on the broker board. I don't think we could keep the doors open. I'm not sure how people are hauling this freight at this price and making it right now. Rates are what they were 20 years ago. I was curious about this, Eric, because I know nothing about the trucking business. But I found this right here, this report that came out, and it was talking about, I guess in 2020, there was an explosion right there, as you can see, as far as new entrants into the trucking industry. And so you can see it's doubled, right? It went from like 300K to, 275K, excuse me, to over 500K at one point in time. And so I'm just curious, is these rates, not because things have gotten slower, is it because there's just so much competition right now? Like, is that what it is? And please let me know in the comments, or whoever's in the trucking business, because usually the more competition you have, the lower the rates are going to have to be because, you have to compete with them now. So I'm just curious about that. And so, yeah, please let us know in the comments on that one. Again, I'm not in the trucking business, but when I saw that, I was like, that makes it make more sense. Or is it because things are just grinding to a halt out there? That's really the big thing I want to know, and get the information from you guys who are actually on the ground doing this, versus looking at some report that's probably 3 months old or something. So that will be nice. And I appreciate all you guys, comments, questions. Please help out in the comments. If you got anything you want to say or help somebody out with some of that stuff, especially about how to find hedge funds and when they're moving in and out of, that kind of thing. So really appreciate it, guys. Again, we'll just keep doing the Saturday videos as long as you want them and stuff. So keep putting your comments and questions down there and we'll keep answering them. All right. So I hope you guys have a good one, and I'll see you later.